Mike Wright with Tax Right. As I said, we're the sponsors of the Red Shoe Business Club, and today we're going to start talking about something that should certainly be dear to the heart of every business owner. And we're going to talk about deductions. Deductions, removals from the removal of expenses from your business. Now, here's what I want you to understand why this is so important. I've done several programs where we've talked about the difference between businesses and non-businesses. We've talked about the fact that unless what you are doing qualifies as a business, then there will be tax consequences because of it. These can be issues of whether or not the business is entitled to hire people. This can be involved with whether or not the business is entitled to take a loss. This can have to do with whether or not the business can even take other deductions, such as the qualified business income deduction and so forth. All of these things require that your activity qualify as a business. Look, the tax code is written in such a way that the government is entitled under the law to collect taxes on all income from whatever source it is derived. Whether it's income you receive as an employee, whether it's income you receive because of the buying and selling of property, whether it's income you receive in kind. In-kind income means stuff as opposed to money, but it's still income and it's still taxable. It's all taxable. One of the things that has been true since the beginning of the tax regime that we work under today, that means going back to 1913, one thing that has always been true is that businesses only pay taxes on their profits. Whereas an employee, everything the employee gets is income. For a business, the profits of the business are all that's taxed, which means that you need to be able to remove the expenses of operating the business first before you count the money that you receive as income. It's a simple process, but it still requires that you be able to justify what you are doing as a business. And so it's important to be able to identify the deductions that you can take, the items that you can expense off, the money that you have to take out in order to do your business. Let's go back to a formula that we shared before. Profits equal income minus expenses. Income is the money you receive. Expenses is what you have to pay out to support that business activity. You will remember that when we talked before about what a business is, we talked about there had to be some kind of economic activity, and that activity that constitutes a business has costs, and you are entitled to deduct those costs before you determine what your profit is. This is something that I get asked all the time. It's something that people ask me almost immediately. What can I deduct? Can I deduct this? Can I deduct that? So what we're going to talk about over the next 3 days at least is what you can deduct. So listen up. Look, the most important thing that I can tell you about what you can deduct is this. You can deduct everything that relates to the operation of your business. You can deduct the cost of everything that relates to the operation of your business. The law makes it a little bit more specific by saying you can deduct ordinary and necessary expenses. Ordinary and necessary. I've said before that business owners do what business owners do. That if you're trying to identify what you're doing as a business, one of the first things that you have to be able to do is to identify what you're doing as a business. Playing tiddlywinks in the parking lot is not a business that I'm aware of. Possibly the manufacturer of tiddlywinks could be considered a business. And in playing the tiddlywink game could be something that researchers could do to improve the quality of the tiddlywink business. But simply playing tiddlywinks is not a business. You have to be able to define what you're doing as a business. And one of the ways we do that, and we've talked about dozens of ways, but one of the ways we do that is that you do the same kinds of things that other business owners who are in that business do. When you compare what you're doing to what other business owners do in your business, then you are able to identify ordinary expenses for that kind of business. Necessary is also defined by what's needed to operate that business. We'll talk about some examples here in just a minute, but to try and make some sense out of what ordinary and necessary means. And so we're not going to talk about anything in specific right now. We're going to talk about generalities. One of the best generalities that I can think of in the case of ordinary and necessary is this. Let's suppose that you have an office. It has silk wall coverings. It has fine parquet floors. You have an antique walnut desk. You have original artworks on the wall. You have soft lighting. You have music. You have books, a bookcase lining the wall. Everything done in walnut and oak. Everything just done to perfection. Leather seating, comfortable places to recline, a nice couch, all these things. Are all of these expenses deductible? Well, let's think about it. If you're operating a buy here, pay here car lot in one of the rougher sections of town, probably not, because that certainly is not ordinary and necessary to the operation of that business. If, however, you're a hedge fund manager where you deal with multi-million, maybe even multi-billion-dollar clients, then it would be. What makes those things ordinary and necessary is that it's what the people that you deal with expect. It doesn't have anything to do with you, with what you expect to be surrounded by. It has to do with what you need to have in order to operate the business in the way you normally operate it. I would say the kinds of fine, high-class surroundings that I described for this office would actually put off many of the clients that would come to a buy here, pay here car lot in the rougher area of town. These are people that are scrambling to be able to come up with the $200 a week payment on the car that they've bought and aren't going to be impressed in the least by your fine antique furnishings. As I said, they would probably even be put off by it. So if I was an examiner from the IRS and I saw that you had those kinds of conditions, I would question whether or not they were a legitimate expense for what you're doing. If I was auditing your buy here, pay here car lot. If, on the other hand, I was auditing your hedge fund offices and I didn't see those kinds of things, that kind of luxury in the office, then I would also question whether or not you're doing things properly, reporting the way you should report it. It's what is ordinary and necessary for the kind of business that you have. I've been asked in the past about whether you can deduct the expenses of your pet. For business, certainly. For individuals, certainly not. But for businesses, certainly not, except it is still common for certain kinds of businesses that have a junkyard comes to mind, but there are probably others. Businesses that have areas that must be guarded, and they have security cameras. They have they may have people who patrol the lots, but sometimes they also simply have guard dogs. Dogs that are trained to protect and to ward off and possibly even attack people who are improperly in the lot. Well, the expenses for those dogs would certainly be deductible, because that's part of the business model of that kind of business. For a farm, aside from the other animal feeds, the cats or perhaps the terriers that are kept in the farm lot for the control of vermin would certainly be a deductible expense for the farm business. You see, you have to look at the individual circumstances in many cases to decide whether or not something is deductible, to decide whether it meets that ordinary and necessary requirement. It's the kind of thing that you'll want to consider anytime you're going to buy something for your business. And as a contrarian, which I am, I try to look for the things that are the opposite of what other people do. I always have to balance that with the idea that if I'm going to do something that's the opposite, then I need to be able to show that the results I've got are better than what I got by doing it the ordinary way. And if I do something like that, then I may have to justify to the IRS that what I have spent money on, even though it's outside the normal realm of the business that I'm operating, because I've done something in a contrarian fashion or apart from that way, I need to be able to justify that the results I've gotten show that it's a reasonable thing for me to have done, and should be able to deduct those expenses. So if you're going to ask me for a list of things, I cannot provide it, because a list implies that every single thing on the list is deductible. And while I could provide you a list of things that mostly were deductible, I certainly can't provide you with an ironclad list to say that, yes, I can deduct that. It's much easier for me to be able to give you a list of the things you can't deduct, that you can never deduct. But the point is that this is something that you need to work with your accountant, with your bookkeeper, to be sure that the things that you're spending money on are deductible. And you want to be sure that you're taking all of those deductions. And here's the reason. Because of the consequences of deductions from the other side, in other words, if you sell something off, if you have depreciation considerations, if you have other income considerations, you are not only permitted to deduct items, but your tax bill will be calculated based upon the idea that you took the deduction, whether you did or not. And so if there's a deduction that you're entitled to, you want to be sure to take it, because even if you don't, you won't get the benefit of it. So I'm going to leave that as a cliffhanger, because tomorrow we're going to talk about some specific kinds of deductions for those of you that are in the property and the construction business. But for today, I want you to walk away with this idea. Remember in your mind that expenses need to be ordinary and necessary for your business. So that's it for today. Tomorrow we'll talk about deductions again. As I said, we'll talk about property deductions. Have a good day.